Introduction to Audit Evidence. There are three principal reasons for using audit procedures. Number one, to gain an understanding of the client and perform a risk assessment. Number two, to test the operating effectiveness of client internal control activities. Number three, to produce evidence about management's assertions related to the amounts and disclosures in the client's financial statements. Once the risk assessment has been performed, the auditor would test the effectiveness of the client's internal control activities to determine how much reliance the auditor can place on the system of internal control as it exists. There will be a discussion of internal control at a later time. If you assume that internal control is satisfactory and may be relied on, the extent of audit procedures included in the substantive audit plan will be reduced. The substantive audit plan would contain a list of audit procedures for gathering evidence related to the relevant assertions identified for the significant financial statement accounts and disclosures at an audit client. The nature, timing, and extent of procedures, which is to say the substantive audit plan, depends almost exclusively upon the assessment of risk for this client. Substantive audit procedures can be classified two ways: analytical procedures and tests of details. For analytical procedures, the auditor must develop an independent expectation of what he or she thinks the account balance should be. The expected amount is compared to the recorded amount, and variations then must be investigated. Analytical procedures are considered more efficient, whereas a test of details is considered more effective. To simplify and organize the gathering of evidence, auditors usually base their examination on the financial cycles of the client. The generally recognized cycles are as follows: revenue and collection, acquisition and expenditure, production, finance and investment. Now obviously if you're in a service company, you don't have production. But these are the generally recognized cycles. There are 8 generally recognized audit procedures used to gather evidence. They are as follows: inspection of records and documents, inspection of tangible assets, observation, inquiry, confirmation, recalculation, reperformance, and analytical procedures.